Hey business owners, tax season may be here and you are probably thinking about doing your taxes on your own. But before you download that DIY tax software, I want you to know what you are up against. That DIY tax software is great for your average W-2 wage earner. But if you are an entrepreneur, you have an LLC, you have an S-Corporation, you do not want to download DIY tax software and do your taxes yourself. There are so many things that can go wrong. And in this video, I am going to break down all the reasons why you're going to want to have a professional help you with that. The one mistake is they typically are missing money on their tax return. When you are filing your tax returns on your own, there is no software matching that is going to tell you if you're missing income. There's also no software that is going to tell you if you're missing deductions. Things like payroll taxes, things like the QBI deduction, things like bonus depreciation. When you're doing it yourself, that software may not ask you the right questions. And if it's not asking you the right questions, you will probably fail to get all of your deductions. So DIY tax preparation could be costing you money. DIY taxes can sometimes allow you to misclassify your income and your expenses. When you don't put your income and expenses in the right categories, you can wind up flagging an audit. For example, a lot of you will put down on your tax returns that you have expenses from Amazon. Were you buying office supplies? Were you buying things to sell? It doesn't tell you the proper categories to put it in, and misclassification many times can drive additional tax or flag you for getting an actual IRS letter, and you will eventually have to pay back tax with interest and penalties. Let's say, for example, you are a 1099 contractor and you put that income under miscellaneous income and you don't put it under business income. You will not be charged a Social Security tax, but when IRS gets your tax return, they will send you a nasty gram saying your income was misclassified. We're going to reclassify it and we're going to charge you the self-employment tax. Tax professionals know exactly the categories that your income and expenses should go in to prevent an audit. DIY taxes can give you audit exposure. IRS likes to audit people who prepare their own tax returns. The reason why is because they know that you are not a professional and chances of you making a mistake are pretty high. So they go after the do-it-yourself individuals. In addition to that, you're not going to have somebody to represent you in the event that you receive a letter from IRS because you did the tax preparation yourself. You didn't have a tax preparer. Therefore, if you want to have somebody represent you, you're going to have to go out and hire that individual. If you get an audit letter from IRS, allow someone else to represent you in an audit, because audits are only about 40% the actual receipt and method of payment. The remainder 60% is about whether or not you can take the deduction or not. So do not be fooled by DIY software. Many DIYs lack the implementation of retirement planning and tax planning. That basically means that when you do your own taxes on DIY software, do you think about what it would look like if I contributed to an IRA? Do you think about what it would look like if I did a SEP IRA or 401k inside of my business? These are the planning strategies that a tax professional is going to look at. Not only are we going to prepare your return, but we're going to run various scenarios so we can see what strategies you can use to drop your tax bill down as low as possible. So if you want to give Uncle Sam a tip and you don't care about tax planning, then I guess DIY software is perfect for you. When you don't know how to properly prepare your taxes, overpaying taxes and underpaying taxes is typical. Most individuals that are preparing their own taxes, especially business owners, you are either overpaying taxes or you are underpaying taxes. Why is that? Because you don't know all the nuances and all the deductions that you can take. That software is only programmed to ask you the basic, cursory, elementary questions to make sure they get the basic write-offs. It is not programmed like a tax professional where if they see one write-off, they think about the next write-off. Allow me to give you an example. If you have a home office, a tax professional is automatically going to think about the utilities, the insurance. Do you have security? Do you have the opportunity to utilize the common area of that particular house? And they're going to ramp up expenses for you that you can legitimately take. Limitations on your write-offs. You're not going to be dealing with limitations on what we can do to help you. DIY software has a cap on it. It is usually for the very simplistic situation. If you have a business or you have multiple entities, that software is not going to look for correlations between the two businesses. It's not going to check for whether you wrote your car off in business 1 or business 2. Once you start to see those green check marks, it gives you the false sense that you have done the right thing. Just because you see the green. Green means go. Green could also mean go directly to IRS and do not stop on the way. You have to be very careful when you own a business to not oversimplify what it is that you need to be doing just because you may have only received 1 or 2 forms in the mail that are your reporting documents. Businesses typically have a lot of other things that they need to be filling out on the back end that most of you are not even aware of. So do not let that DIY software oversimplify your tax situation. Do not think that DIY software is saving you money. If you pay $100 or $200 for that software, you may think, wow, I'm saving money because I don't have to pay that tax professional $600, $700, or $1,000. But the question you need to be asking yourself, how much is it costing you to not use a tax professional? How much are you leaving in Uncle Sam a tip? Many times when you are not using a tax professional, you are overpaying your taxes. You have to think about it just for a second. These are individuals that have gone to school, who become educated and have been doing this for years. Do you think that you're picking up some DIY software off of a shelf or downloading it from the internet compares to that level of expertise? It does not. So do not think you're saving money, because when you get that letter in the mail from IRS stating that you underreported your income or misclassification and you have to owe back money, and you're going to have to owe back that money with interest and penalties are 5% per month on the underpayment up to 25%. That little $600 or $700 you thought you were saving would be a drop in the bucket. You would gladly pay that money. So don't have a false sense of security. At the end of the day, you want to work smarter, not harder, and definitely not cheap. DIY software could be potentially costing you money and opting you out of using a professional who knows exactly what they're doing. In addition, can give you advice on your business. You want to partner with somebody that understands your industry, somebody that understands taxes and can take you to the next level. If you're doing it yourself, chances are you're going to wind up in tax trouble. When you are an entrepreneur, there are a lot of things we do ourselves. We wear a lot of hats, but tax preparation is not a hat that you want to put on your head. You want to definitely avoid that at all costs. If you enjoyed this video and it resonates with you, I'm going to ask you to leave a comment, and I'm going to ask you to subscribe, because once you know better, you absolutely have to do better.